Mr. Shalabh Saxena, the MD and CEO of Spandana Sphoorty Financial, joining us on the show. Shalabh, hi, thanks so much for making time and speaking with us. Let's start with that supply pressure that we saw yesterday as well. There was a bulk block deal that happened. There's also Kedara Capital, which almost owns 48% stake. Is there any conversation which is ongoing with them where they are looking at an exit? What kind of buyer interest are you seeing? What's happening overall with respect to the entire share holding pattern which is changing?
One of the things that we've been doing over the past 5-6 quarters is, apart from what I covered in my first opening remarks, that we've been focused on delivery. We are also meeting a lot of stakeholders. Meetings are obviously very interesting. For the quality of delivery that we are doing as a management team, many people who are interested, and we kind of engage with them, answering their queries and asking questions coming from their side. We kind of give them the answers that are required to address their curiosity and concerns. Broadly speaking, specific to your shareholder question, see, once again, I go back to like a broken record. I will say that there's little that we can comment. It does not really disturb our overall equilibrium in terms of the, what is the task at hand, and that's what we are completely glued on.
Okay, sure. The shareholders are not in your hands, but what is in your hand is business. So let's talk about that. How's been the credit demand of late? Because earlier you talked about a target of 10,000 crore AUM by Q2. Have you achieved that? And overall for the year, what does the guidance stand at?
See, the credit demand across the country is very secular. Without exception, every single region or geography that we operate in, we are seeing robust and good credit demand. That's point number one. Point number two also is the fact that what we are seeing is the quality of the portfolio has significantly improved over the past 4 or 5 quarters that we've been operating, because the tailwinds are behind the industry. The COVID pain is gone now, and now this is a completely new world. So as far as the demand is concerned from the customers, we see both we see a lot of uptake and a good quality demand. So that's the initial comment that I would want to give on the demand piece. As far as our guidance was concerned, we are very much on track. We should end this quarter, give or take a couple of 100 crores here and there. We should be in the range of about 10,000 crores, as we had expressed in the previous discussions that we had. We will end this year, which is FY24, in the range of about 12,000 crores, and then we have another 25% growth for FY25 targeted, which will take us to 15,000 crores, which was the exact number that we had released to the stakeholders when we came out with our Vision 2025 document in July of 2022. So we are on track.
Okay, so on track for your AUM targets, but I also wanted to, talk about the overall product mix in terms of MFI versus non-MFI. It's still early days for your non-MFI verticals like LAP and nano enterprise loans, etc. But how's been the demand so far?
At this point in time, when we came out with our Vision 25 document, we had said, apart from the microfinance remains the bread and butter, and we'll continue to nurture it and grow it, in a very calibrated and a mature fashion. The other two business lines that we are focusing on is the nano MSME loans and the loan against property. Strategically, we as a company, our sweet spot is rural and semi-urban as far as these two businesses are concerned. So we've launched, the loan against property business in Rajasthan. We already had a book, so this is not a completely new product for us. We had a book about, if I go back to FY22 end, we had a book of about 130 crores. We were just waiting for it to stabilize. Now that we have the COVID is out and, the company is reasonably stable, we are now stepping up our accelerator on the loan against property. As we speak today, we have 10 branches. We've already employed about 100 people. And this business, along with the nano MSME business, together will contribute about 2,000 crores by end of FY25. So the 2,000 crores of nano MSME plus LAP and 15,000 crores of microfinance. We make it 17,000 crores end of FY25 for Spandana Sphoorty. That's our aspiration, and that's how we are planning and working towards delivery.
Okay, quite confident about the growth there, and that's the word coming in on the non-MFI vertical as well. But you undertook a capital raise very recently, right? Tell me what kind of runway for growth does it give you, and when, by how soon do you expect it to quickly utilize?
So if you see our financials, we have a pretty strong balance sheet. Spandana Sphoorty has a very strong balance sheet. If you see our last results, our CRAR is 38%. So when we did our maths, when we came out with this Vision 25 document, our plan until FY25 does not need a capital raise. We are good. Even then, if we reach FY25 end, we should be in the neighborhood of about 24-25%, which is still still above the regulatory requirement. However, growth capital at any point in time is good. When we reach that level, we'll obviously kind of evaluate our positions. But as of now, until FY25, with the current state that we are in, we are pretty comfortable.
Okay, Shalabh, on that optimistic note, we let you go. Appreciate you joining us on ET Now. But with that, we're completely out of time on this edition of Markets at Noon. From the entire team, thank you so much for tuning in. But as we